What if I told you the setup we called a few weeks ago didn't just play out, it actually got more extreme? Because here's the thing about RZLV stock. The squeeze setup is getting extremely tight, and today we're going to break down exactly why the pressure inside this pressure cooker has intensified to a level almost nobody is talking about. Look, most retail investors are out there chasing overhyped mega-cap tech stocks at all-time highs. But while they're distracted, a high-stakes chess match is quietly playing out in the options chain of Rezolve AI. A few weeks ago, we laid out a highly controversial thesis that this stock was primed for a violent gamma squeeze. And today, we're not just here to take a victory lap because our technical floors held to the exact penny. We're here to analyze the brand new high-impact data showing the fuse has been shortened, the fundamentals have now been officially verified by the SEC, and the short sellers are officially trapped. If you want to stay ahead of setups like this before the crowd catches on, do me one quick favor and hit that subscribe button right now. It genuinely helps the channel and it keeps you in the loop. All right, let's get into it. But before we look at the mechanics of how this squeeze is going to detonate, let's lay out the entire board so you can see exactly how the trap has been set. When we first analyzed RZLV, we called it an asymmetric pressure cooker. For our thesis to work, we needed 4 specific pillars to align. First, we needed the technical floor to hold so our risk was strictly defined. It did. Second, we needed options volume to test the major breakout ceilings. It happened. Third, we needed the company's outrageous preliminary growth numbers to be backed up by official SEC filings. They were. And fourth, we needed Wall Street to validate the long-term value. Right now, the consensus price target represents an explosive 300+% upside. But while these growth numbers look incredible, there is one hidden metric we'll look at in just a moment that changes everything. It relates to a deliberate defense mounted by institutional market makers, a defense that has temporarily pinned this stock and coiled the spring to an almost unbelievable level of tension. To understand where we're going next, we have to look at the battlefield of the last 2 weeks and see exactly how our predictions matched up with reality. So let's pull up the actual candlestick chart and trace the exact price action since our August 3rd forecast. Take a look at this daily chart. In our August 3rd video, we identified the $2.50 options wall as the absolute battleground. We predicted that breaking above this level on high volume would force market makers to aggressively buy shares to hedge their positions, sparking rapid expansion. And look at what happened just 2 days later. On Wednesday, August 5th, RZLV surged plus 2.65%, with a violent intraday peak move of plus 9.5%. By Friday, August 7th, the stock blew straight through the ceiling, officially opening the trading session at $2.73. The breakout was triggered exactly as we forecasted. But as you can see, the stock didn't just launch into orbit immediately, it pulled back to consolidate. And if you're wondering why it pulled back, the answer lies in the flawless defense of a technical floor we mapped out weeks ago. We established a crucial accumulation zone between $2.15 and $2.25. Now look at how the market respected this zone. The structural support held flawlessly. Smart money aggressively stepped in to absorb every single minor dip into the low 220s, pulling the spring tighter and tighter, while the stock's absolute one-year bottom of $2.05 stood firm as a concrete floor. This means your downside risk was incredibly well-defined. If you accumulated shares in our recommended zone, you bought at the absolute structural bottom of this entire asset's trading history. But that's only half the story. Because if the breakout was real and the floor held so perfectly, then why is RZLV currently sitting right back down at $2.49? Why hasn't it already exploded? Look at the option chain expiring this Friday, August 21st. There's a massive, towering block of open interest concentrated directly at the $2.50 call strike, with over 6,200 contracts. And there's an absolute mountain of 13,600 contracts sitting at the $3 strike. When you see open interest of this magnitude on a microcap stock, it means institutional market makers are doing everything in their power to defend these strikes. They're aggressively selling shares and shorting the stock intraday to keep the price pinned under $2.50. Because if the stock closes above $2.50, they're on the hook for millions of shares. Combine that with macro headwinds, like shifting interest rate outlooks that have temporarily pinned high-growth tech, and market makers have successfully manufactured a temporary ceiling. But they are playing an incredibly dangerous game. Because while they can manipulate the price in the short-term options market, they are rapidly running out of physical shares to do it with. Let's talk about the absolute key to any massive short squeeze: severe float illiquidity. A squeeze is a game of supply and demand. If the supply is locked up, Even a tiny increase in demand will send the price vertical. Well, RZLV's supply is mathematically microscopic. Insiders and major passive holders have locked up massive chunks of shares. CEO Dan Wagner's entity holds approximately 9 million shares. Passive giant Alejandro Gonzalez holds a massive 7.5% stake, representing over 30 million shares. That's over 39 million shares completely locked up. And on top of that, RZLV has an active, massive $300 million share buyback mandate that's constantly sweeping the remaining supply off the open market. The tradable float is practically non-existent, and this brings us to the ultimate catalyst. The shorts are trapped in a room with no exits. Take a look at these brand new updated short interest metrics. In our original video, we talked about a trapped short seller demographic of 35.9 million shares. But look at the latest exchange data as of July 31st. Instead of covering, the short sellers doubled down. Short interest has exploded by another 8.28%, bringing the total trap supply to a staggering 38.92 million shares. That is 36.98% of the public float. And because the daily trading volume is relatively low, it would take 4.8 days of average volume for these shorts to actually cover their positions. Now really think about that for a second. Nearly 37% of the float is short. The tradable float is locked up by insiders. A $300 million buyback is eating up shares every single day, and it takes nearly 5 days to cover. So once RZLV breaks past that market maker defense at 250, the short sellers will be forced to panic buy to cover. But here's the question that should keep them up at night. Who exactly are they going to buy from? Now, none of this squeeze potential matters if the company is a hollow shell. But the operational news we've received since August 3rd is absolutely breathtaking. Since our August 3rd video, RZLV has dropped a barrage of groundbreaking operational catalysts that prove this company is a fundamentally dominant AI powerhouse. On August 5th, they filed an official Form 6K with the SEC detailing their massive India AI hub, which employs 550 AI specialists and is already driving $50 million in total contract value. Then, on August 6th, they submitted another filing directly comparing themselves to legacy competitors. On August 13th, they launched their patent-backed Rezolve Provenance platform to capture a multi-billion-dollar regulatory market. And finally, on August 18th, they released mind-blowing operational metrics from their deployment at the World Cup. This is not a speculative meme stock. This is a rapidly growing enterprise. And to appreciate just how fast they're growing, we have to look at how they're utterly demolishing legacy tech companies. In that August 6th SEC filing, Rezolve did something brilliant. They directly contrasted their hypergrowth execution against the deteriorating performance of traditional e-commerce platforms like Commerce.com. And traditional e-commerce is hitting a brick wall. Commerce.com reported a stagnant, flat 0.1% year-over-year revenue growth, along with a complete collapse in their margins, all thanks to their heavy legacy technical architecture. Meanwhile, Rezolve AI's pure-play conversational AI native architecture is scaling at 20 times the speed of legacy platforms. This is a classic textbook disruption. While legacy systems require massive, expensive infrastructure just to update, Rezolve's AI native setup lets them capture hypergrowth with virtually zero legacy drag. And their newest platform is about to monetize a massive regulatory shift happening across Europe. On August 13th, Rezolve launched Rezolve Provenance. This is a proprietary, patent-backed platform designed specifically to mark and verify AI-generated content. So why is this such a massive deal? Because on August 2nd, the European Union officially enacted the EU AI Act. Under Article 50 of this law, companies are now legally mandated to clearly label AI-generated content, and Rezolve's new platform is a direct compliance solution for this brand new, legally binding regulatory market. This compliance space is projected to grow from a $4.2 billion market in 2026 to a staggering $16.9 billion by 2033. Rezolve has positioned itself at the absolute center of this regulatory goldmine, with a legally protected, patent-backed monopoly on this specific verification technology. But this isn't just future regulatory potential. Their enterprise tech is already handling the biggest stage in the entire world. For anyone wondering whether their AI tech can actually scale, just look at the press release from August 18th. Rezolve reported staggering operational data from their deployment in the 2026 Football World Cup app. We're talking about processing 103 million app opens and 5.8 million location events across 16 distinct stadiums. This is the absolute peak of global consumer demand. To handle transaction execution, personalized engagement, and instant notifications at that kind of scale without a single hitch is a massive engineering feat. And it's all supported by their world-class India AI hub, which houses over 550 engineers supporting more than 1,000 enterprise customers. The technology is proven, the scale is massive, and the monetization is actively happening right now. So the real question becomes, when does all of this explosive fundamental growth finally force the stock to break out of the options pin? Mark your calendars for Tuesday, September 1st, 2026. This is the ignition event. Rezolve is scheduled to officially report its detailed, finalized first-half results and host a live investor webcast. This is the highly anticipated data release where management is expected to officially verify their monumental $127 million revenue target. And to put that into perspective, they did just $6.32 million in the first half of 2025. That is a massive vertical leap. So when those audited finalized numbers hit the tape on September 1st, it could serve as the primary fundamental catalyst to blow straight through that market maker option wall at 250. So what is all of this growth and squeeze potential actually worth? Let's talk about the valuation. Right now, Wall Street is highly bullish on this stock. Out of 7 analysts tracking RZLV, 6 carry a buy rating, with only 1 sell, giving it a consensus moderate buy. The average Wall Street price target stands at $11.42, with some fair value models pointing to $10.75. From RZLV's current price of around $2.49, moving to that more conservative $10.75 target represents a staggering 303% to 358% upside potential. And if you look out long-term, simply Wall Street models show that if management achieves its target of scaling to a $500 million annual recurring revenue run rate, RZLV is projected to reach $971 million in revenue and $117 million in earnings by 2029. So how should we actually play this right now? Here is our exact tactical blueprint, depending on your investment horizon. If you're a short-term momentum trader, you want to continue to load and accumulate shares when the stock trades near the $2.15 to $2.35 range. Maintain a strict, non-negotiable hard stop-loss right below that one-year structural floor, around $2.05 to $2.10. Your trigger is a high-volume breakout past the 250 option wall, which could spark a rapid run toward the 50-day moving average at $2.56 and the 200-day moving average at $2.62. Now, if you're a long-term value accumulator, your job is simple: strong buy and hold. Ignore the weekly option noise, tune out the market maker price manipulation, and let the company's massive growth, its SEC-filed fundamentals, and its $300 million buyback mathematically drive the share price toward its fair value. And before we wrap up, we need to do a little quick housekeeping regarding some technical decimal points from our last video. Just to make sure our community has the absolute sharpest technical precision, I want to clarify 2 minor decimal typos that popped up in our original video transcript. The automated transcript showed our hard stop loss at $25. Obviously, since the stock trades at $2.49, that was just a vocal slip or an auto-transcript error for our actual key support levels of $2.05 or $2.15. The transcript also listed our moving average target at $262. This was simply a missing decimal point, and it should read $2.62, which represents the 200-day simple moving average. Clarifying these minor decimal points keeps our data completely flawless as we watch this high beta squeeze play out. Now, before the final word, an important disclaimer. Everything in this video is for educational and informational purposes only, and it is absolutely not financial advice. I am not a licensed financial advisor, and nothing here should be taken as a recommendation to buy or sell any security. Microcap stocks like RZLV are extremely volatile and carry a very high risk of significant loss. Squeeze setups can fail, catalysts can disappoint, and prices can move violently in either direction. Always do your own thorough research, and please consult a qualified financial professional before making any investment decision. Never invest money you cannot afford to lose. So with all of that laid out, here's the real question I want you to answer down in the comments. If RZLV closes above that $2.50 wall this Friday, how far and how fast do you think this thing squeezes? Drop your price target below, because I genuinely want to see who calls it. If this breakdown helped you understand the setup, smash that like button, hit subscribe so you don't miss the September 1st follow-up, and I will see you in the very next video.